Time now for an in-depth look at the market news as we start the week. And for that, I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for coming on today.
Happy to be here.
So Korean stock markets today down a staggering 3%, even 4%. U.S. stocks last Friday were down around 1%. What's the story right now in the markets worldwide?
Okay, well, I think the end of last week, global investors realized that it was not just a Chinese problem, it was not just an Asian problem, but it could conceivably be a global problem. The United States, because they haven't had much coronavirus there, and because perhaps the investors were overconfident that if there was indeed a negative shock from the coronavirus, the Fed would lower the rate, which would raise the stock market. I think they took the possibility of stock market fall a bit lightly, but that I think started to go away at the end of last week. So as you mentioned, the U.S. markets fell about 1%, and it may be that that downward trend may continue once the market starts in the U.S. because the Asian markets all lost value today. And then Europe, I think at the end of last week, Euro 50 lost 0.6% of its value. They may continue that trend as well because now Italy has become one of the fastest growing corona-affected countries. And China, well, they had a slight rise in the market on Friday, but they've turned negative today. So all the stock market is now realizing that COVID-19 is more serious than they had thought at the beginning of last week.
Yeah, and U.S. futures are pointing to a much lower opening on Monday in New York. But overseas investment firms are now sharply cutting their growth forecasts for the Korean economy. Those numbers would suggest that hopes are dashed, more or less, for this recovery we'd all been looking forward to. What do you make of these downgrades?
Okay, well, most of the downgrades, assuming that the COVID-19 in China doesn't spread too much beyond China and it ends around the end of March, has been assuming that the shock would be significant but temporary in terms of the global market. And the under that scenario, a lot of investment banks, including ING, Bank of Korea, Merrill Lynch, Societe Generale, has readjusted Korean growth rate for 2020 to somewhere between 1.6 and 1.9%. Now, at the end of last year, when these investment banks and international organizations were estimating Korean growth rates for 2020, we had the optimists and the pessimists. The optimists we're estimating somewhere between 2.1 to 2.4% growth. That includes the Korean government, Bank of Korea, and the IMF. And the pessimists were assuming growth rates of somewhere between 1.6 to 1.9%. And that's about where these investment banks reestimated growth rates are ending up right now. And probably it's because the optimists had assumed that the semiconductor prices would continue to rise, but that price rise has stalled because, well, China is the biggest purchaser of semiconductors to make their own computers, smartphones, and whatnot, and production in China has slowed down considerably in the first quarter and likely for the parts of second quarter as well. So the price rise of semiconductors has stalled, and that means that the pessimistic scenario that we had last year becomes more likely. Now, a situation can become even worse than that because, well, it's not just semiconductors, but we've seen from Hyundai Motors that even a shortage of a minor part can halt the production process. And now the Korean companies themselves are considering stopping factories for a few days or a week so that they don't have COVID virus spreading to their workers. And we've all heard about the tough times that the restaurants and retail stores in Korea are having. So it is very possible that we will have a growth in 1% range. Somewhere between, say, 1.2 to 1.8%. But some of these investment banks are estimating that if Chinese COVID virus goes on for much longer and if it spreads globally, then Korean growth rate may fall even below that to the 0% range, somewhere between 0.1 to 0.9%. I think that's, at least for now, much too pessimistic, but we'll have to wait and see.
All right. Well, this is said to be a big week ahead in terms of the coronavirus and fighting the economic impact of it. The BOK, for one, will be deciding on interest rates with expectations growing for a cut. What should we be watching this week?
Okay, well, as you mentioned, there is the BOK monetary policy meeting, but the governor, Lee Ju-yeol, has given strong hints that he's not ready to lower the rates at this time. Now, there is a comprehensive government plan that will be announced this week, as well as discussions of supplementary budget in the National Assembly. So even though this is not a scheduled event, I think this will be an important news that people should be interested in, especially on the supplementary budget. I personally don't think, given the large budget increase that we had for the regular budget, I don't think a supplementary budget is needed at this time, but politically, it's about as close to a sure thing as I think we can get. It's just a matter of how much and in what areas will they raise the supplementary budget. And then the most interesting economic report, I think, coming out this week for Korea is actually the February Consumer Trend Report. In order for Korea to get beyond the economic slowdown, which we were experiencing even before the COVID-19, consumption has to rise, but we'll have to see whether the long-term trend that we saw in January of consumption increasing, how much of that has been changed by the COVID virus that we saw since the early February. So the consumption trend report will be very interesting. And then in the U.S., we have the Consumer Confidence Report. Because the U.S. growth has been led by consumption, I think how much the consumer confidence has changed will tell us how long a recovery that U.S. can hope for. And then we have China Purchasing Managers Index for manufacturing, so that we can see how the manufacturing sector is doing on China, how bad it was hit by the COVID-19.
That'll all be very interesting to see later this week, Professor Young, but we'll have to leave it there for today. Thanks so much for sharing your insights with us.
Thank you.